We will enhance the support levels for grant schemes that support companies to internationalize, up to 70% for small and medium enterprises or SMEs, and up to 50% for non-SMEs. We will also enhance a market readiness assistance grant to support companies, not just to access new markets, but to deepen activities in existing overseas markets as well. Under the double tax deduction for internationalization scheme, companies automatically enjoy a 200% tax deduction for selected qualifying activities capped at $150,000. We will allow more qualifying activities to be eligible for such automatic tax deduction claims and raise the cap to $400,000. We will enhance the enterprise financing scheme by increasing the maximum loan quantum for trade and fixed asset loans. This will give companies more flexibility to cater to their different financing needs. And we will also provide more support for companies pursuing significant overseas ventures that require higher capital outlay. And the Minister for Trade and Industry will share more about these changes at the Committee of Supply. Second, we will build leadership in key growth clusters. And that means anchoring critical segments of global value chains here in Singapore, especially activities with high knowledge content and strong spillovers. Our goal is not just to host such activities, but to shape how these industries develop and where they create value. We are already doing this in some areas, like semiconductors. We see a similar pattern in other key industries, like aerospace and biomedical science. Technology is the critical enabler underpinning our strategy to build leadership in these clusters. Singapore must be a place where frontier technologies are developed, tested, and commercialized. And that's why we will invest $37 billion under the Research, Innovation, and Enterprise, or RIE 2030 plan. This reflects our sustained commitment to research and innovation, amounting to around 1% of GDP each year. At the same time, we must be realistic. In absolute dollars, our public R&D spending will always be modest compared to the sums deployed by much larger economies. We cannot outspend them. Instead, our investments must be disciplined, focused, and strategic, directed at areas where Singapore has clear strengths and where our efforts can make a real difference. And there is potential in emerging areas like decarbonization solutions and quantum technology. In quantum, for example, we made an early and deliberate bet. In 2007, we established the Center for Quantum Technologies at NUS. Much of quantum research then was still theoretical, but we invested patiently in building foundational capabilities, believing that these would one day translate into transformative applications. We will strengthen our enterprise ecosystem. Enterprise funding is a key part of this ecosystem. Over many years, we have worked steadily to strengthen this area. In venture and seed funding, we have made good progress. Compared to a decade ago, it is now much easier for startups to access early-stage capital. But many firms continue to face challenges at the growth stage. This is not unique to Singapore. Globally, growth stage capital has tightened. As a result, many firms, especially in deep tech, find it harder to raise the larger and longer-term funding that's needed to scale. We will therefore do more to catalyze growth capital in Singapore. Under the Startup SG Equity Scheme, the government provides initial capital to catalyze and crowd in private funding for promising startups. To date, the scheme has focused mainly on early-stage funding. We will now go further. I will set aside $1 billion to enhance Startup SG equity and expand its scope to cover growth stage companies. Beyond this, we will take a more systemic approach to strengthening our growth capital ecosystem. We will convene a new work group led by Minister Chee Hong Tat, working closely with the industry to develop strategies to position Singapore as a leading center for growth capital. When enterprises are ready to list, we want them to see Singapore as their listing venue of choice. We had earlier set up the Anchor Fund to attract and anchor high-quality listings, and we are now seeing encouraging signs of renewed listing activity on the SGX. I will therefore launch a second 1.5 billion tranche of the Anchor Fund. As with the first tranche, this will be a co-investment between the government and Temasek. We will also continue to strengthen our broader equities market. Last year, MAS launched the Equity Market Development Program to develop our fund management industry and increase investor participation in Singapore equities. Industry response has been encouraging. MAS has allocated close to $4 billion to 9 asset managers. To build on this momentum, I will expand the program with a $1.5 billion top-up to the Financial Sector Development Fund. At the same time, we are implementing the other recommendations of the Equities Market Review Group. This includes streamlining listing rules and requirements to make it easier for high-growth companies to go public and establishing a dual listing bridge connecting the SGX and NASDAQ. These measures will enhance the depth and vibrancy of our public equities market and provide more pathways for enterprises to grow and scale from Singapore.